He made millions selling lies. He served less than 2 years in prison, and when he got out, the world made him famous. This isn't a story about success. It's a story about persuasion, loopholes, and a system that rewarded the wrong outcome. This is the rise and reinvention of Jordan Belfort, and how financial crime became entertainment. What he did after prison may be more disturbing than the crimes themselves. Long before Wall Street, Belfort showed an unusual skill. He could convince people. As a teenager in Queens, he wasn't exceptional academically, but he understood something most adults didn't. If you control the conversation, you control the outcome. By selling simple products door to door, he learned how urgency, confidence, and repetition could override hesitation. The lesson stuck. And that lesson would later be used on thousands of unsuspecting investors. Belfort briefly pursued a traditional career path, enrolling in dental school. But when he was told the profession wasn't about getting rich, he left immediately. Not because dentistry was bad, but because it had limits. He wasn't interested in slow progress. He wanted exponential results. That desire for scale would eventually define every decision he made. After college, Belfort launched a small sales business. On the surface, it worked. Revenue came in quickly. But behind the scenes, costs spiraled, logistics failed, and the business collapsed. The failure wasn't financial, it was educational. He realized something critical. The product didn't matter nearly as much as persuasion. Once he understood that, his next move became inevitable. In the late 1980s, Belfort entered Wall Street as a junior broker. He learned how markets functioned, but more importantly, how brokers sold confidence, not certainty. Then the market crashed. Thousands lost their jobs. Belfort lost his too. But instead of seeing disaster, he saw an opening. In the wreckage of the crash, he found the perfect tool for exploitation. Penny stocks were cheap, lightly regulated, and ignored by major firms. But they offered enormous commissions. Belfort realized he didn't need accurate information, only belief. By overwhelming clients with confidence and urgency, he could move money fast. Each call was a transaction built on pressure, not understanding. And soon, he wasn't just selling stocks, he was building a machine. Belfort founded Stratton Oakmont, a brokerage in name, but a sales operation in practice. He didn't hire experts, he hired desperation. Employees were trained to eliminate doubt, ignore risk, and close aggressively. The firm targeted people unfamiliar with Wall Street, retirees, families, first-time investors. Hope was the product, urgency was the weapon. But the real damage came when the operation scaled. Stratton began controlling stock supply, inflating prices through coordinated hype and selling at the peak. When the price collapsed, investors were left with nothing. Inside the firm, this wasn't considered wrongdoing. It was routine. Lavish spending masked ethical collapse. Excess replaced caution, and eventually the attention became unavoidable. Regulators noticed patterns. Journalists asked questions. Money trails led overseas. As pressure increased, insiders began cooperating, not out of guilt but self-preservation. Belfort's empire didn't fall overnight. It leaked from the inside. When the evidence became overwhelming, he made his most profitable deal yet. Facing decades in prison, Belfort cooperated with authorities. He provided information, recordings, and testimony. Many associates received lengthy sentences. Belfort served 22 months in minimum security confinement. But the story didn't end when he was released. After prison, Belfort wrote a memoir. Not a warning, not an apology. It sold very well. Hollywood adapted it. Audiences applauded. The story became entertainment. Meanwhile, victims waited, many never recovering their losses. The man who sold lies now sold motivation. Courts ordered restitution totaling over $100 million. Only a small portion has been repaid. Today, Belfort remains a public figure, selling books, speeches, and sales training. His greatest success wasn't on Wall Street. It was convincing the world that his story was inspirational. And that raises the final question. Was this a failure of one man or a system that rewards confidence over consequences?